festering.
My Lords, I rise to speak to Amendment 10 and 112, both of which are in my name, and also I gratefully acknowledge the support of the Noble Lord Seeker. This is a bit of a diverse group, but I think Amendment 10 in particular is heading in a similar direction to the Noble Lady Baroness Bowles of Berkhamsted Amendment 9, a direction that was seeking to lead towards a financial sector that meets the needs of the real economy rather than swallowing up the scarce human and capital resources that could be put to far better effect than to create complex financial instruments that, when they go down, threaten the rest of us to take the rest of us with them. Had it not been for events between a committee and report stage, I might have chosen to sign that amendment rather than tabling my own Amendment 10, that Clause 24 not stand part, which is the growth and competitiveness clause to which the Noble Viscount has already referred. This exactly mirrors the amendment tabled at committee by Lord Seeker and also signed by myself then. But I thought that it was really important, in light of events, that we tackle the growth at any cost foundation that underlies Clause 24. Infinite, let's chase as much growth as we can, which is, of course, the ideology of the cancer cell. As Lord Seeker said then, the secondary objectives of growth and competitiveness cannot be reconciled with the main role of ensuring financial stability and consumer protection. Now, that's a position that we both hold, but it was clear at committee that there was no support from the front benches and it might have been allowed to lapse. But then there were events that highlighted so many dangers of chasing growth of the financial sector. Several weekends of financial panic, of emergency meetings, of sudden bank rescues, parts of the real economy, particularly the digital sector, left highly uncertain about its financing. I'm referring, of course, to the collapse and rescue of Silicon Valley Bank, of Credit Suisse and of Signature Bank, the first and last of those being mid-sized US banks, the middle a former European banking colossus. Now, these US events came after President Trump in 2018 watered down the Wall Street Reform and Consumer Protection Act, better known as Dodd-Frank, reducing the supervisory oversight of banks with assets between $50 billion and $250 billion. This is some of the watering down of the US that the Noble Viscount referred to in his introduction to this group. But of course, just because someone else is doing the wrong thing and reducing the controls and the protections doesn't mean we should chase after them and try and compete with them. As the New York Times' David Enrich put it, this was a crisis that has revealed the extent to which the banking industry and other opponents of government oversight have chipped away at the robust regulatory protections that were erected after the 2008 financial meltdown. Finish quote. What has happened is competitiveness had been advanced, security was lost, risk increased, and a great many people had sleepless weekends as a result of that. What's also become clear since our committee stage debate is how Credit Suisse clients withdrew nearly $690 billion from the bank in the first quarter of this year before its fire sale rescue by UBS in March. Now, of course, Credit Suisse had been hit by the insolvency of Greensill Capital, something rather close to home to your Lordship's house, by the collapse of the family office of Archipelagos Capital, huge trading losses. But the end came very quickly. And it's clear that in the digital age, which SVB had helped to fund, financial events can occur at a speed that were unimaginable even in 2007-8. And I do wonder if, in wrapping up, any of the front benches might be prepared to say if they believe that regulators are today truly prepared for the world in which they operate. A world, of course, that also faces the risks of other substantial shocks, as we've just seen highlighted today in terms of the Russian attack on the Novokakhovka dam, geopolitical risks, and also, of course, environmental risks, if we look at the fact that today, as we speak, Canada is essentially ablaze, which undoubtedly is going to have enormous impacts on the insurance sector. Now, I quote from the IMF Global Financial Stability Report from April, which reflects on the challenges posed by the interaction between tighter monetary and financial conditions and the build-up of vulnerabilities since the global financial crash. It says the emergence of stress in financial markets complicates the tasks of central banks when inflationary pressures are more persistent than anticipated, a statement that's particularly true within the UK. There's stresses from the shadow banking sector, the effect of geopolitical tensions on financial fragmentation, and the risk of potential capital flow reversals, disruption of cross-border payments, impacts on bank funding costs, profitability and credit provision, and more limited opportunities for international risk diversification. The IMF, this is the IMF I'm quoting here, concludes there is a need for strengthened financial oversight. This is all referring to events essentially since we debated at committee. So that's my case for Amendment 10. My Amendment 112 is something much more modest and addresses in a different way a point that I also raised at committee. I discussed then the literature, the growing body of literature around too much finance. But what I'm not asking the government to do with this amendment is to agree with me in this amendment. What I'm asking in this amendment is for the government to prepare a report to consider what is the ideal size of the financial sector. What is the Goldilocks range for a financial sector that we can afford the risks, we can supply the human resources, and it fits to actually serve the needs of the real economy? As the House has heard before, I approached this question in the light of the Sheffield Political Economy Research Institute study from 2018, which found that the UK had lost £4.5 trillion over the course of 2 decades because of its oversized financial sector, £67,500 per person. But to bring this right up to the present day, a study just out in the last week, the global hiring website ClimateBase has posted more than 46,000 jobs from over 1,500 organisations in the past 2 years. Of these, data science and analytics were the hardest to fill, taking an average of nearly 4 months to fill posts, compared to 3 months for engineering roles. Which brings me back to the Clause 24 not stand part, Amendment 10, because I would suggest, and I didn't have a chance to speak at committee, that Clause 24 as it stands is actually internally contradictory. It gives the FCA the duty of facilitating the international competitiveness and medium to long-term growth, I quote now, of the economy of the UK, brackets, including in particular the financial services sector, close quote, close brackets, finish quote. So this clause says grow the economy of the UK and grow the financial sector. Now, I would posit that those two objectives are actually mutually contradictory. And I'd refer to a Bank for International Settlements working paper from 2018 titled "Why Does the Financial Sector Growth Crowd Out Real Economic Growth?" It is actually impossible to both promote the real economy and the financial sector. And it comes back to probably the easiest part of this to understand, to think about human resources. We all know the labour shortages, the skills shortages that so many sectors of the UK economy is suffering, and we know that many skills are going into the financial sector when they might be going into other areas. So tomorrow, your Lordship's House will be debating the report of our Science and Technology Committee, which is titled "Science and Technology Superpower, More Than a Slogan." Now, I'd make the point that I'm not asking any of the front benchers or the government to agree with me on the claims that I'm making here. What Amendment 112 asks for is for a report to look at the evidence so the government can make considered judgments, so the country can make considered judgments about what size of financial sector we both need and can afford.